All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Tuesday, the 12th of July, 2022. In a overcast, somewhat, overcast day here in Boerne, Texas. Texas in general dealing with a lot of heat lately. Guys had a threatening that we might see rolling blackouts yesterday with all the power draw coming from everybody's ACs because we've had this ridiculous heat here. So but we seem to have skirted by that yesterday, though we will see ERCOT, which manages about 90% of the supply here, the grid and whatnot, expects us to just keep using more and more power. So we'll see what happens as this week continues on. But so far, so good. One of those things, Bitcoin miners being paid here by ERCOT not to mine when there's when they need this kind of power. So Bitcoin miners here in Texas. Texas become a big destination for Bitcoin miners because of the energy cost and whatnot around here usually. And so, and of course, finding power from excess energy being produced at these oil heads and whatnot, wellheads. Big Texas miners kind of stopping their mining for a little bit here, and that provides. I think it's at like 1% of the power here in Texas actually. So we do have that happening. So we'll see. If ever I'm on here this week or whatever and I just happen to disappear all of a sudden, it's probably a power loss, and that's why rolling blackouts, great things. Hopefully we won't get that, but we'll see. What else we got going on? Bitcoin bears kind of pushing it a little bit here, so we'll talk about that. Is the dollar finally ready to pull back a little bit? It looks like it may be. Remember, tomorrow we've got CPI release, right? Also, mortgages. We talked about this, I believe, last week. They're down about 0.5% all of a sudden. That happened, I guess, about a week ago, right? And that's just the fears of recession coming in and whatnot. So we'll take a look at that as well. Talk about a few other things. Who's here already? Nevlusian, what's up, man? Blaze is here. Sarang, hello, sir. Do I still trade stocks or Forex besides cryptos? Of course. Yeah, I'm always trading. Forex is the number one thing I trade. FX market is great. So, yeah, I mean, I might hold off sometimes on stocks or sometimes on crypto, but, man, I'm always trading FX, sure. Oscar, what's going on? Data, good to see you. Dancer Eddie, what's up, man? Still love that name. Because I always think of oh, man, what's it called? National Lampoon's Vacation there? Cousin Eddie? One of my favorite characters. Chance, what's up, buddy? JW, good to see you, man. Checking in from Houston. How hot is it over there, man? It's kind of hot, isn't it? Andrew, good morning, sir. So anyway, hey, good to see y'all checking in here. As always, you can join us here at howtotradetowin.com. We've got some really great stuff. I told you, we're going to be releasing a whole bunch of stuff, different services and things that we're going to have here. Some of them free, some of them, cost a little bit. But I think overall really exciting throughout the end of this year and into next year. And so I think here in the next week or two, I'll probably start announcing that. We've got something really big that we're going to be launching, and our members know about it. So it's exciting stuff there, but I'll mention it here probably in about a week or two. So that's a really exciting thing. What else we got going on? Yeah, so join us here at howtotradetowin.com. We'd love to have you there. As always, Tier 3 is the place to be. Hundreds of hours of video education there, guys. We do 3 live streams a week, or we try to. Holidays and what sometimes gets us, not all 3. But, usually we try to at least make it up sometime during the week there. But we generally do Wyckoff on Mondays. We do Elliott Wave on Thursdays. And then we do what we've been doing for the last, 2 years now has been tips, tricks, and techniques there on Wednesdays. And we're going to be, over the last few weeks, we really kind of spent a lot of time talking about price action. That seems to be a great thing, naked price action trading. And so I think Wednesdays are basically going to become that now. So, every week, an hour live stream there with that. It's great stuff for Tier 3. Of course, everything else Man, we'd love to have you there. No matter tier 1, 2, or 3, whatever, man. We got an amazing community of people, traders in there. It's just a lot of fun, I think, anyway. Not a whole lot of them talk. It is what it is. But you know, everybody's really, you know, there to be helpful and you know, not to like give you a hard time or anything like that. I think it's probably, unfortunately, with new traders, you know, they're really nervous about speaking up because they're scared to be wrong. You know, and you know, at least with what we do there, our members are really, really kind and helpful and whatnot, and so they're willing to help you understand where you may be not seeing something correctly, or even just kind of giving you their thoughts and why they see things a little bit differently. And so then you get a lot of information in there, which is great. And if you're a new trader, you know, seeing other traders that have been trading a while and understanding what their thought process is and how they're looking at things and what they're looking at and why really helps you ramp up over time. So anyway, yeah, we'd love to have you there, guys, okay? Let's see here. What do we got going on? Amazon delivers some bad news for the economy. This was released back on July 1st. I keep forgetting to talk about it here. But, you know, again, guys, I think Jim Cramer said he's expecting the market bottom on July 13th. You know, I think the top's in, guys. I mean, you know, we've talked about it. NASDAQ topped out, I believe, in November of last year. And then the Dow and the S&P in January of this year. The count off the top, maybe a 1, 2, 1, 2, and then 1, 2, 3 heading down. So if so, we should expect a big move down sooner rather than later. Because of that particular structure, though, it could also be a leading diagonal, which means we'd have a fake bottom, basically. It'd be wave 1 down, and we'll have a big move up for wave 2, but it won't breach the all-time high. And so, you know, the psychology of waves, I think this is something that a lot of people who try to learn Elliott wave, they just try to learn mechanically how to do it. They don't try to understand what's going on. But there is a psychology to the wave structure and what's going on. And so wave 1s are basically often considered, you know, if it's in a, you know, if price is coming down, wave 1, they, that's that one's coming down there. You know, they just expect it to be a pullback of the overall larger rally, right? And so then when wave 2 comes in and it starts going back up, they're like, see, I told you. And it isn't until price turns around and breaks down below wave 1 and wave 3 goes down that they're like, oh, crud, I got caught, right? They're like, oh, man, you know, it's really going down and now I'm screwed. So I got to get out. And that, you know, of course, it gets all that participation in that third wave and, you know, it ends up being really strong and whatnot. So again, you know, we're going to wait and see, you know, are we doing the 1, 2, 1, 2 and heading down? Or, you know, is a 5-wave leading diagonal? And so we've got some move up to kind of false sense of security for the market, make them think, oh, yeah, like Jim Cramer, then, oh, yeah, the bottom's in maybe, and then head lower. So we're going to see that. I think, you know, one of those two is the way we're going right now. Why tomorrow, Jim? I think it has to do with the CPI release. So remember, CPI is going to be released tomorrow. And so, you know, that's kind of been rallying up, you know, over the last year and whatnot, along with employment dropping down. And those two things have created this thing for the Fed to continue to intervening in a really strong way, right? So we'll see what that's going to come in tomorrow. But again, I think, I don't know, you know, again, I still think we're probably around the top as far as CPI goes and, you know, the inflation data, stuff like that. And so a turn down doesn't mean that the Fed's going to pull back. I think they're still going to have another strong rise here coming up like they suggested they will, right? Like they're saying they're going to. But again, you know, I've been talking to you guys about the end of Q3, the beginning of Q4 kind of being the time when the Fed will potentially start pulling back a bit. Doesn't mean they're going to reverse, but, you know, they won't raise the rates as much, I don't believe. And so that's what I'm looking for coming up here in the next few months. And then that, of course, will, you know, impact how the markets are moving and whatnot. But I think, you know, again, looking at Amazon here, they've been on a tear, you know, raising, creating new warehouses or whatever for a long time, right? And so what they talk about here is back in April, Amazon posted its first quarterly loss in almost 7 years, right? Chief Financial Officer Brian there, I'm not even going to try and pronounce his last name, said that the company overestimated how many warehouses were needed. So, what they did is that they didn't open at least 13 of the warehouses that they planned to open in the last year. And so when you wonder, how's the economy doing? Well, you've got Amazon, which I think it even says here, it takes up about 45% of the American e-commerce market, guys. That's almost half of it, one company, right? I'm guilty. I buy through them. But yeah, so that's significant. If you want to know how your economy's doing, how are they doing, right? And they are not doing so well. They're, again, they had these big plans, robust plans, slash it, right? So I don't know that I necessarily believe that that we're going to see a new all-time high in the markets there. I mean, I'm always open to it. Again, as Peter Brandt likes to say, strong opinions weakly held, right? That means, have a reason for for your opinion and make sure it makes sense and whatnot, but, and then trade by it. But when new information comes in and says, hey, what you're thinking is not necessarily correct anymore, then you need to be able to pivot, to change, guys, okay? So anyway, yeah, so, we got that going on. We talked about the blackouts here. We avoided the blackout yesterday, right? But they're looking for even more power to come in, used to come in today and tomorrow, but we haven't been threatened with a potential rolling blackout, today and tomorrow or anything like that yet. So hopefully we won't. It gets hot in Texas. I'm going to tell you what right now. It's getting hot in here lately. Let me see here. Oh, yeah, JW Smith says tier 3 pays for itself. I appreciate that, man. Yeah, I love having you guys there. Name Mr. Wilkes. Good to see you, buddy. Let me see here. What else do I have here? Oh, mortgage rates. Yeah. So, again, talked about mortgage rates dropping off, right? We had that 5.8, 5.9, I think. Yeah, 5.81 in mid-June is where it peaked. Dropped 0.5%, man, right to 5.3 that last week. And so, I mean, if you're looking to buy, it's a little bit of a reprieve, right? Again, if we think about it historically, that this 6% kind of area is really kind of average for mortgage interest rates, right? It just feels so significant because we were down around 2% last year, right? And then we've had this huge run up this year. I think 2.5 points since January. So, up through the high there, and then of course pull back 0.5 point there. But yeah, for people like myself who are buying and not really wanting to wait any longer, a little bit of a reprieve there. But again, it's all about that idea of a recession potentially coming in. So, you say, well, why are the mortgage rates dropping if the Fed's going to raise again, right? Rates hit huge again. Because the market believes that, not just the market, but the mortgagers there believe, mortgage companies believe that we've got potentially this recession coming in. And so recession means lack of getting in there and getting it done, right? Who's going to be buying in a recession, right? Buying drops off a lot. So, they're doing what the market, was looking for, hopefully. And we'll see what happens. But, houses themselves have just risen so significantly over the last few years. I saw an article somewhere talking about some areas should probably see like a 50% drop in housing price. I think Boise, Idaho was the leader in the U.S. as far as being overvalued. Something like 70% overvalue. So in other words, if your home should be about $100,000, it's going to be $170,000, right? So places like that, you'll definitely see the biggest drop, more likely than not, in the housing prices there. So, if you can wait, probably a good thing to wait. If you're impatient like me, pay a little bit of a price here, right? Yeah. So, that's kind of what we've got, going on there with that. But, again, this is all the same stuff I talked to you guys about end of last year, into the beginning of this year, what we expected as we rolled into the summer and into the fall of this year. So everything kind of happening as expected. Now we just need the Fed to continue, to start pulling back here. Not this next one. Like I said, it'll probably be the one after that. But let's see how this CPI number looks today. So, been pretty spot on for the most part over the last few years anyway with the economy and interest rates and the Fed and everything else. So let's see if I can keep that going, right? Excuse me. Let me see here. So that is that. Let's see. What do we got going on here? So the BLX. If you guys, I don't know if you guys have been paying attention. This is the monthly. Let's jump down here to the weekly. So, the weekly here, and then we've got, as we get on in here to the daily. And so, you've got your hash ribbons here. Remember we used to talk about these? I guess pretty much everybody was for a while there, right? A few years back. Well, anyway, so we have this huge, much larger than normal capitulation right here, right? Let's see if we can get a little bit easier picture here. There we go. So most of them look like this. And these are the points at which, capitulation, it's saying, is happening, right? If you'll notice, we have this huge one again right here on this low here. So this was that time when, again, when I was telling you this looks like the top, doesn't have to be the top, but it's likely a top because of all the excessive exuberation there. With the diamond hands and laser eyes, the dumbest thing anyway. But that was all up here, remember? And I said it's probably the top right there. I said it's probably not the top, but it's a top. And so, yeah, so then we got this pull down. And remember, all your big accounts were like, oh, buy the dip, buy the dip, buy the dip, all the way down until it got here. And then here, they were like, oh, no, now sell, sell, sell. And, we were looking at a rally. And so we can notice that we've got this big, huge capitulation going on in this area and a much smaller one so far in this area here, right? So, again, what I've been talking with Discord about is what I believe is retail, more or less, and we can see it kind of in the volume as well, right? So we had volume continue up here through the top there, right? Well, I'll get back to the weekly here. There we go. And then after here, when you get down to the bottom here, volume just kind of drops off as it rallies back up, right? So not a whole lot of new buying going on. So I think basically what we get is we get retail capitulation here, and then a little bit more retail buying here. Not a whole lot because as you can see, the volume's dropped off, right? And then we get retail capitulation here, which leads to that whole domino effect with Luna, UST, Three Arrows Capital, Celsius, Voyager, BlockFi, all that stuff, right? And I think that's this right here. So I believe that this, and then of course that leads to miners dumping, right? Because it keeps dropping lower there. So I think this is all like a, just an event, right? That happens because of what happened with Luna leading into Three Arrows Capital. And everybody's just being over leveraged and invested in everybody else. And so they all get stuck, right? And I think that's just this unwinding right here. I think that's what that is. So now we want to see, do we get this continuation up? This right here is the 200 weekly MA right here. So really, we're kind of looking for a breakout and remain above this 22,006, 22,007 kind of area on the big time frame here on the weekly. If we can break out above that and stay above that, I think that pretty much says bottoms in, we're headed up. But right now, again, this just becomes more like our regular capitulations. This one, nothing's been like this anywhere in the history of Bitcoin as it's done here. See? Come on, we can go all the way back here. And I'm not going to change this out here, but if you come into the BLX and you put on your hash ribbons, just go up here to indicators and type in hash. It's hash ribbons right there. And that'll bring that up. And you can look back and see there that, again, usually your capitulations look like these little smaller things. It's never been this big here. So, we'll see if that's correct on that. But that's what I'm kind of thinking. Right here, we have bullish divergence on the MACD histogram. So we've got higher lows off here. We've got lower lows off here. And so, Stoke RSI, still well oversold, hasn't broken out yet. Come on. Whoops. Nope. Didn't mean to do that. There we go. RSI hasn't broken back out of oversold yet. So, a lot of things kind of setting up for, hey, potentially, the bottom may be in. But, from a big picture perspective here, you kind of want to see it get above that 200 MA on the weekly. Baltazar, what's up, man? Good to see you. Mike says, I think that without the Luna crash, 3 Arrows of Capital, etc., would be at a 30K instead of 20K. Yeah, I think so. I really do, Mike. I think, again, if we just look at, even just looking at the hash ribbons here, this suggests retail capitulation here in a huge way. And then, we get a minor kind of like capitulation here from those that maybe either didn't sell here and or bought up here. And they finally capitulate as we drop below this right here, right? So they're like, oh God, we're going to sell because it's going to continue lower. And then that starts that domino effect because everybody was leveraged into everybody else. I mean, you look how many people were loaning money, sometimes without any collateral at all required from 3 Arrows Capital, right? And so, Luna goes, 3 Arrows holding that, USD and all that kind of drops off. Luna, 3 Arrows in trouble. 3 Arrow can't pay back its stuff. All these other companies that loan money to it because, hey, they had all this money. What else are they going to do with it? They're promising these big APYs, right? Like Voyager and whatnot. And so they had to make money. They had to make it. So they had to loan out that money. They couldn't just hold it. And, of course, that didn't work out, right? So I think that may be what happened here. So, time will tell, but I think that may be what happened there. So just kind of looking at that, just some stuff to watch on there. We can look here. We've been looking lately at Biddy. So I pulled up, let me see here. I pulled up this Bear USDT on FTX here. And I believe, if we zoom out of here, I believe it's A down here at the bottom and then an ABC up for B here. And then I believe we're doing a leading diagonal for the first wave down off B, of C. And then it looks like we might have topped out with wave 4 here. And so wave 5 would then come on down here toward this ascending channel EQ, the S1 pivot on the 4 hour there. Descending support kind of area. So right here, probably around 0.000219 or so, maybe, to get us wave 5. So it'd be 1, 2, 3, 4, 5, and then likely 1, 2, and then 3, 4, 5. So if this is correct and this is going down, then Bitcoin should go up, right? Inversely correlated. We can look here at that inverse correlation right there. This is Coinbase, this one up here. And you can see how well it kind of works with it, right? So we'll see if we get that. We'll see if we can get that down, which again would then suggest this kind of pops up as we do there. Now, this coming down, again, we generally would look for a target of this area right here below that wave 3 toward that support. But you could always get a throw under and then a rally, a big rally right back up into it. With this right here, we should have a pretty easy movement here. As we break out through the swing high up in this area, this resistance, it should move up pretty easily through this inefficiency. And this is that 28 to 30,000 area. So I can see this kind of rallying up through that and see this dropping hard and maybe even dipping below, give us a throw under, and then right back up. And so this will rally up and then come on back down to this area here. So you get wave 1 up, 2 back, and 3, 4, 5 kind of thing going on there. So that's what I'm kind of looking at here, right? So we'll see. We'll see if we can get this follow through on the way down. By the way, if this is correct, you will see we've got a lot further to go here, right? We've got to get below wave A over here, right? So we're really up here a lot. We've got to get down below that to get wave C finished. I don't know that it's going to be down here. I'm not saying it's going down here. I was just throwing that wave C down below. But this should mean, your Bear USD is falling off, which means price should go up, right? And so we should see that rallying up there if that's the case. This would get us, we have a wave A up here at the at this area right here, right? And that's that wave A right there. So maybe get up there and then figure out what happens. So if we're looking at Bitcoin, it hit our target box down here. Now we're, it's not really rallying strongly up yet, but there is inefficiency right here. So, breaking out above this 20,050 level, I think should get us a pretty, easy move up here to 20,375.5. That's our minimum expected wave 3 target there. Wave circle 3 has a minimum expected target up here at 25,522. And so again, inefficiencies here, what I was showing you on that other chart, should have us rallying up into this 28 to 30,000 area here. If we can break out above kind of this daily pivot here around 23,172.5. If we can get above that, we should rally on up, teleport up there toward the daily R1 pivot, which is right here. That's at 28,800 almost. So yeah, again, breaking out above the daily pivot. There's nothing here really slowing us down. Should rally right back on up into this area. And so that, generally this would give us 5 waves up to this area. So that would be a 1. We get a 2 on the pullback toward the pivot. And then we're headed up there. If we do it. I'm not guaranteeing we're going to do it. But, again, when we're trading pivots, coming in sideways between the S1 and the pivot, if we're breaking out above that pivot, then generally we expect to target the R1 pivot area. And that's usually 5 waves up. And the wave 2 pullback is usually around a 50% around this pivot here. There's a 50% retracement. So you get a 1 and a 2, then you head up. So that's what we're going to see. Now, again, this isn't guaranteed. And so what do we want to see? Well, on the 1 hour and 4 hour, I want to see a breakout above that pivot. That's that 20,775, 20,800 kind of area. I want to get a breakout above that. Getting a breakout above wave parentheses B up here, 22,134 and 72 cents is going to add confidence to this 1, 2, 3 count. Again, suggesting that wave circle 3 is in progress to a minimum expected target of 25,522. If we break down below this swing low right here, though, I think that adds a lot of possibility that we may be seeing a new lower low again around the 15,415 area minimal. But we could still, it could just be a deep pullback here to the S1 pivot on the 1 and 4 hour, right there around the 90% retracement, about $19,090. So we're going to watch that anyway, but if it's dropping down below here, I think I want to prepare for quite potentially taking out the swing low here, because I think if we lose this swing low, wave parentheses Roman numeral 2 here, at 18,603. If we're dropping below that, I think we go below the swing low here and we head on down there. So no guarantees yet. The other possibility I've been talking to Discord about is, this could still be 3 here, and we could actually get potentially 4 up toward this area up here, right? Toward this 28, 30,000 area. Get wave 4 up there, gets rejected, and then wave 5 down lower. But I think once we kind of get through this 32,000 area here, 32.5, I think at that point bottom is, for all intents and purposes, likely in. And then we head up higher from there. So it's just getting through this. We just got to deal with this. So we take it, day by day, trade by trade, until we get some better feeling for it as it's going. I think if you're doing anything else, I think you're just asking to lose money. But you do you, right? Let me see here. Andrew, what's up, man? He says, Bitcoin Weekly. Interesting to see how similar the candles are here. The 21st, November of 21. Let me see here. In 21, November 29th through December 27th, and the recent last 4 weeks happening now. Could Bitcoin be in a 4 of a large C? Maybe one more drop for a 5? Sure, yeah. Same thing I talk about every week, guys. There is no guarantee that we're bottomed. There's a lot of indicators and things suggesting that we may be, but nothing can guarantee you that we are. So that's why we play these shorter term trade setups, right? Looking for confirmation that builds on itself that the bottom may be in there, right? But yeah, it could definitely potentially head lower. Sure. Mike says, story of Bitcoin is at the beginning stages. I think big wallets, exchanges, and miners excluded. There will be only 10 million Bitcoin for normal people. Normal? What's normal these days? I intend to be one of those owning 1 or 2. Yeah. I don't see, again, guys, I've been talking about this for years, right? And so we don't know how Bitcoin would act in a recession or, God forbid, a depression, right? Bitcoin has only been around in a secular bull market, right? It started right after the great financial crisis bottomed out in the markets, right? So there's no telling how it would act. But, when we look at it, those of us who have been in the markets, right, we're going to look at it and go, okay, well, it seems to be a can't even think of my words are now. It seems to be a risk asset, right? So, like when it's risk on, so the best way to explain this is when the market believes that it's okay to be risky, right? This is what I'm trying to say. When the market believes that it's okay to be risky, or it's, things are going on that say, okay, maybe there's room here to add more risk. That's what Bitcoin seems to be. That's where it seems like it would flourish, right? But again, we don't know. It's a different product than anything else out there. It seems to fit the bill of that, but we have no historical record as for what happens with it when the market does go risk off, right? So we want to see how does it play out. I still believe in Bitcoin. I still own, what I own. So we'll see if we can get that to continue, to continue to break out higher there. There's a lot of different narratives. There's been a lot of narratives with Bitcoin, and most of it's just a bunch of nonsense. It's a bunch of hopium. It's a bunch of people who are either trying to sell you something related to Bitcoin, or it's by people who don't really understand monetary economics, global finance, stuff like that. So we'll see how it plays out. I refuse to follow any of the narratives. I'd rather watch the charts and work with the charts and see what's going on there. The good thing about learning to trade charts, guys, rather than trying to trade fundamentals or something, is that if you want to trade fundamentals, especially with stocks and whatever, you got to, you learn all the accounting stuff and how to read SEC reports and all that stuff. And for most people, it's boring and confusing and whatnot. Technical analysis on a chart is something, anybody can learn to do. You don't have to have any certain degree of education, or, you don't have to be the smartest guy in the room, right? You just have to understand, okay, how do these systems work? And then you practice them until you get good at them, right? You practice them correctly. And so that's why, when new traders come in, they often talk about fundamentals, and I try to steer them away from that, at least at first, because it's so much easier to learn how to trade the chart than it is to try and understand fundamentals and why they could change and what could change them and what that would mean and all these other things. This kind of gives you a black and white look at it as it, based on your system. So just, something to think about if you're coming in and you're saying, oh man, fundamentals, this and that. Just understand that's going to take a lot more time and effort on your part than the charts, technical analysis with the charts. What does definitely potentially mean? That means there's definite potential for it to happen, as opposed to not to happen, right? So what we're saying is, I'm using, it's like saying, when it's raining and you're standing out in the rain, you're literally going to get wet. Well, if you're going to get wet, then you're going to get wet, right? You don't have to use literally. I didn't have to use definitely with potentially. So yeah, I've been around my 11-year-old too much. He's on the literally phase right now. Him and his cousin. He's got the rest of us talking like that. But yeah, so definitely potentially just means that there's a good likelihood that could happen, as opposed to no chance at all or very little chance. Yeah. So glad you called me out on that. Not really. How do I boot you? No, I'm kidding. Anyway, so yeah, so this is what we're kind of looking for, guys. Nothing's really changed. Again, we're rallying right up here to the descending channel support there. That is around that July open, right around that 19,985 kind of area. So we hit it, pulled back. We hit it, pulled back. We're hitting it. We're trying to break out through. Again, should be an easy move up through this area. Minimum expected wave 3 right there, 23,075. If we get back into this descending channel here, then, generally the way you play channels, guys, if you work your way back up into it, your next target becomes the channel EQ. If you can make an impulsive breakout above that, your next target is a channel resistance. And if you can make an impulsive breakout above that, often that means that your bottom's in and you're going for a new high. So again, nothing's ever 100%, but generally when you're using channels, that's how you play them. Just the pattern itself, the channel itself. So we'll see what we can get. We'll see. And by the way, this is not what I'm talking about. I'm talking about a break in and close in here where it stays in here. I'm not talking about like just a wick up into it and back out. You need to see some staying power inside that to set up the move to the EQ. And then you're looking for an impulse. If you just get just like a gradual move through the EQ, I'd be wary of pullback at least, or potentially even just a rejection in that area and continuing lower. But if you can get an impulsive breakout here, expansion of volume, larger candle spreads breaking out through that EQ, most often it'll target the channel resistance, then it'll pull back. And then again, it's 5 waves into that. So it's a 1 and a 2 and then a 3 on the breakout through that channel resistance. As we always talk about, the wave 3s are what's breaking out, right? Let me see here. What else do we have here? Oh, the DXY. Let's talk about that. So DXY, stopping just short of my target there. We had a 108.63 target. It hit 108.56, 0.562. So got pretty close to it. Pulling off here. It's a pretty good decline so far. If wave 3 is complete, then we're looking for wave 4 right here at this gray box, which is basically just the 38.2 to the 50% retracement area there. So again, the other way we'd be looking at it is we coming in sideways between the R1 and the pivot. Break out here. If we come back and retest that pivot as support and then break out above the high here, then we're likely rallying, up here. And of course, up through this area. And so this becomes the target up here, 113.390 to the EQ up here about 114.348. Could pop out a little bit higher there. But if we get that, if we get the pullback to the pivot here and then a breakout above that swing high, then generally we should probably expect a target up here, right? If we continue breaking on down through there, that might start suggesting a larger top maybe in. And so we'll have to see. It's just really kind of not a real fun count coming up through here. But we'll see what we can get with this as it continues on through there. But right now, looking for a pullback toward this area. Is that the 15-minute pivot? Yeah, so that's a 15-minute pivot right there. Maybe get a bit of a bounce and then dropping on down there lower. So it could be like an A, a B, and a C maybe coming into that. While this is pulling back, Bitcoin has less pressure on it to go lower. So again, could see Bitcoin rallying up through there as this drops down. And then this rallies up, Bitcoin pulls back kind of idea, right? So that's what we're kind of looking for right here. But definitely want to see some more impulsive movement back down here to kind of suggest that wave 3 may be done there. See the bigger picture here. This is the futures. Let me see here. So there we go. Again, this is the daily here, right? And so what do we have? We have a move in sideways between the pivot and the R1. We continued up, pull back the R1, continuing up. When you see this structure on pivots, most often price rallies up here to the R4, R5 area. Usually runs through the pivots. So still that 114.44 area, right? Isn't that what we were looking at? Right here. 113.93, 114, almost 114.4. Yeah, right there. So that's, what we would normally expect anyway with that. So we'll see if we get that. We'll see if that's what happens. Until it pulls back more, though, that's what I'm going to be looking for. Let's see here. What other charts do we got going on here? Nope, that's the wrong one. Let's see, we got wheat here. I'm going to look at wheat real quick. So I think wheat here, 3, 4, 5. I think we still got a fifth wave here. Yeah, so I think maybe we've got a bit of maybe like an A and a B and then a 1, 2, 3, 4, 5 coming down here for 4. So Russia invaded Ukraine over here. This is the weekly. This is the week of the 22nd of February. Had the spike up, then the pullback. So, again, if I'm looking at this, coming off this low over here back in September of 16, I think it's possible that we may be 3. It could be 5. It's just slightly above this over here, so it could be 5. But we're looking for a 4 here on the pullback, and then we'll look for a 5 to rally higher. If we can get 4 off this EQ down here, this is a 5 up here at around 1997. So up in that area. If it continues down through there, then that may suggest that a 5 is done there, running down. But there's the story of wheat, though, on the weekly. Get on the monthly here. Look at that. So again, could be 1, 2. Let me see here. Maybe even 1 and then 1 and then A, B, C2. 3, 4, maybe 5 coming up here, getting off. See the big drop off up here. We've got bearish divergence, lower highs in the oscillator, higher highs in price. With the RSI there from that swing high back there in 07. Well, I guess the swing high was a little bit upward, so we had some bearish divergence here. We had higher highs in price, then we had lower highs right here, and then coming off that right there. So we'll see how that plays out, but basically almost ran all the way through the R5 pivot on the monthly. Losing that monthly support, I think, starts building a case for this to fall further. Could it be maybe let me see here. Maybe it's an ABC is a 1, 2, ABC is 3, 4, ABC is a 5. So we might have it even go up a little bit higher, or maybe not quite that. Possible. So right now we're just looking for this pullback toward where we are. There's a little bit lower there, and seeing if we can get a rally up off that. So, wheat prices may go a bit higher, which means food prices, right? Because a lot of things are made with wheat. So quite potentially. But if we start seeing some significant movement down below this pivot here, then it opens up, initial target maybe down here around 514. Initially anyway, getting down to there. Let me see. So, could I look at ARC weekly? Yeah. Give me a minute here. Let me see if I remember to do that. Let's look here at NASDAQ. Let me see here. All right, so NASDAQ. It looks like we've got 1, 2, 3, 4, 5 down here. So I think we've got a 1, we'll get a 2, and then we have 3 coming down. Breakdown below wave B here at 10,850.01. Should add a confidence to the idea that wave 3 is in progress. And that would be down here to around 9,097 on that there. But, of course, a breakout above this. It's a slightly higher high here. But a breakout above that would suggest that maybe 1, 2, 3, 4, 5. And that'll get us to 78.6 here at around 11,917. And that'll finish filling in this gap over here from June 10th. So, again, we could see this breakout above wave 2, and that just means wave 2 is probably up here around that area. So it'd be just like a 1, 2, and then a 3, 4, 5 up there. Like I said, it looks like 5 down, but I could maybe get a WXY out of that. So we'd have to see. But breaking down below wave B here should signal that wave 3 is in progress down there. Hey there, Silvio. Good to see you, man. Let's see here. E-minis. Kind of bring this chart out here. E-minis. Again, same idea. You know, if it breaks out above wave 2, we'll look for it to rally up here a bit higher. Maybe even... let's see here. Maybe we would have to assume that this is A here and this is B here. And so then wave C would equal wave B right here around 40.50. But we could see it kind of rally up into 41.23 here, which takes that high volume node up here at the top. It'd be a deep pullback, but it, you know, could be. But instead, if it does continue down here below 37.44, that opens up the likelihood that wave 3 is in target down here toward 30.47.50. Okay. And let's see here. Let's look at oil. What's going on with oil? Ooh, oil just keeps on dropping. All right. So my oil count here. Let's see here. I've got us at a... of course, this being a large 1-2. Locally here, I've got us at a 1-2, 1-2. So we've broken down below wave parentheses B here at 97.93. That should indicate that wave circle 3 is in progress. Let's see here. Toward 74.68. So we'll see if that does indeed play out there. And of course, that'll overextend wave 3 here, which had a minimum expected target 83.32. I don't think you can make this into a leading diagonal here. Yeah. So again, you know, a breakdown below wave 1 over here at 93.05. That may suggest a bit of a, you know, a double top kind of thing going on. Generally, that'll give us... Just kind of picking this real quick here. Pattern target down there maybe of 67.88. Which will get that filled in. It'll get us near this, what would be the wave circle 5 target down there. So we'll have to see how it continues to play out with that. Yeah. If we do break out above wave 2 up here at... Oh, let's see here. 105.24. That'll invalidate that count, and we'll look at something else potentially going on. But right now, it doesn't look like it wants to stay up. Let's see, what does a 4 hour look like? 4 hour, we're just starting to get toward oversold there. We're jumping right into the demand here in the wick. The daily still looks like it's got to go for. It still looks like it's going to go further to get into oversold, and we're about to cross bearishly here, and so room for this Stochastic RSI to drop as well. Again, there's our overall kind of picture of what we're looking at here. If I look at this as a range here, and I want price to go up, I don't like this here. Look how the candle spreads are getting larger. Look how the volume's expanding. That usually suggests that, you know, this is distribution is coming at the end here, so we'd look for a nice big breakdown here coming in. All right, guys. So just be careful with that. You know, everybody's talking about $300 oil. Again, I still don't see it at the moment, especially not if the economy continues to get worse. Again, we've got companies laying off people left and right. We've got, you know, Amazon failing to open all the warehouses it planned to open. You know, we've got just so much of that stuff going on in the economy right now that I don't see the demand for oil continuing to increase any significantly. something that would take it to $300 a barrel. It doesn't make sense right now, at least not based on what the economy's doing. Because remember, oil is not just, your fuel. It's also what's used in plastics and whatnot. So if you've got overall the economy, if people are not buying as much, less need for it in production of plastic, stuff like that. So, as well as, of course, your travel. And, of course, if the economy is rolling over like this, people are going to start taking less and less flights, less and less cruises. It may not show up right this second, but that is what the drop-off will be. And so extra demand of oil will not be there. You got contracts, airlines and cruise lines and whatever. They kind of, they try to hedge for, prices in the future. And so, again, they're going to have whatever they need immediately, but what they're looking for future purposes will be dropped off. So that'll have a downward effect on the price of oil as well. Let me see here. Silver real quick here. Let's see what we got with silver. Yeah, so silver, I think I've got the possibility that wave 1 is done here, and if so, wave 2 has got an initial target of the pivot, the 1 hour pivot. Secondary target up here around this wave 4 at about that R1 pivot area. But it's also possible this may just be wave 1 of wave circle 5, right? And so if that's the case, it's kind of hit our wave 2 target area up here around the 70.5. Right here, the high volume nodes right there around 78.6, so could see that up to there. Again, puts it right around the wave 4 target, which is what we usually look for. And then we'll look for a breakdown here. And that'll give us a wave 3 minimum expected target, at least at 17,895 right there. Wave 3 of 5 on silver, okay? Gold. Gold. Let's see here. Whoops. Let's get down there. All right. And gold looking more like lower down, even than silver did, right? So we do have the breakdown here. I've still got this wave 5 of 3 target down here around this kind of 1707 to 1710.5 kind of area. So we'll see if we can get a 3 there, a 4, and then a 5 down. Kind of see if we can get it lined up with silver. This has been some really cruddy price action right here. And look at this nonsense. That stuff's just not fun to do. But anyway, so, as long as we continue pushing down here, we're still looking toward that minimum expected target down here for wave circle 3. Generally, gold and silver should probably move, continue to move in tandem, guys. Now, you were looking for ARC, right? I haven't looked at ARC in a while. Man, remember all this fun stuff? Called up all this looking for the breakdown here and then here. So yeah, continue to do what he's doing. We were looking for a wave 5 around here. Might have been that right there. 1, 2, 3, 4, 5 maybe. Yeah. Nonetheless, we've come down here. So let's look where we're at locally here. We've got capitulation here at the lows on the daily. Rally up, a breakdown. Nice, huge breakdown there. Found support down here right at the top of this daily demand structure here in the wick. Right there. And so that gave us that rally up off there, which is pretty nice. So if I'm looking at this off here, it looks like we've got 1, 2, 3, 4, 5. So maybe like a leading diagonal here. And then we got 1, 2, 3, 4, 5. How's that weekly look? Ooh, that weekly's getting up and overbought already on the Stochk RSI. RSI is showing a bit of bullish divergence right here, leading into the rally off that low. Let's see here. Was this the weekly? Yeah. So yeah, got some bullish divergence into the big old daily candle, a huge lower wick, small body at the top, usually suggests that we're heading up further. And so pulled back, and it did. Pulled back, did there. So we're right here around this high volume node. Again, look at that capitulation volume right there at the lows. This hit the weekly demand structure right here. So that's where the initial one hit that led to the on that bullish divergence there. So yeah, if I'm looking at this, let me look at my other chart over here. Pull it up. I know I saw an article not too long ago where they were saying that Kathy Woods feels better about Bitcoin now. Thinks the low may be in there, which, you know, again, maybe. This thing's being slow here. Let me do this. Let me open up another one here with ARC. Get rid of all that. Whoops. Oh, just trying to get this back out there a little bit. There we go. Let me turn off all these EMAs and stuff. All right. Let's see. See if I can get this aligned with my other chart over here. And so, oops, get that out of the way. So maybe 1, 2, 3, 4, 1, 2, 3, 4, 5 maybe. So might be seeing like a leading diagonal here. Something like this, like a expanding, descending, broadening wedge. So just give us like a 1, 2 down here, or 1 right there, and then 2 up here. Almost pulls it right up there, doesn't it? It's got a swing high there of 126.32 and 126.25 here. So maybe we can go off this right here. 1, 2, 3, 4, 5. So again, maybe another diagonal here. Let's see, right there. Pretty similar to the other one. And so that would give us then a 1, 2 here. And then, of course, we've got this 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So it gives us a 1, 2 there potentially. And then it looks like a 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 1, 2, 3, 4, 5. Let's see here. So that would be a 3. And then 4. Let me see here. Okay, that wasn't a leading diagonal there, so that's clean. So we can get a, oh, Lord have mercy. 1, 2, 3, 4, 5. So maybe we get a 5 there. Brings us a 3 here. This looks like 3. This looks like 1, 2, 3, 4, 5. So I'm going to assume 4, 5. Which may get us a 3, 4 potentially. Let's see here. So be 1, 2. It looks like 5. I mean, and then this looks like 1, 2, 3, 4, 5. See which one's higher here. 4608. 4605. So like an ABC is 1, 2. ABC is 3, 4. ABC is 5 maybe. So that would be a 1 or an A, and then a B, and then 1, 2, 3, 4, 5 potentially there. It's a pretty short pullback. Let me see. It's 38.2, almost 50% on there. If we can get 5 here, rather than down here, we could be a 1, 2, and then a 1, 2 coming off that. So, let me see here. Let's kind of flesh this out a little bit here. So 1, 2. And then 1, 2, 1, 2, 3, 4, 5, 3, 4. Let me see. Let me kind of pull this out here. Extensions. Right here. So 1, 2, 3, 4, 5. 3, 4. And that could be a 1, 2, 3, 4, 5 right there. So I think we can get actually 5 right there. That's 3. That's 4. That's 5, which is 3, 4, 5. I think this might be the better count. 3, 4, 5 off here, which gives us 1 or A, probably 1 down here and 2. Let's see here. Yeah. And then that would make that a 1, 2 right there. Potentially. And this would be, I mean, this would make sense if the stock market is topped out like we talked about. This would make a lot of sense here. Because the stock market would continue lower if it's the 1, 2, 1, 2 coming down like that rather than a leading diagonal. $44. $14.93. All right, so that would be the wave 3 there. Man, that's not looking pretty. that there. So I guess what we'll look for now is we'll see, does it break down below this swing low right here, this wave B area. So what is that? 35.65. So if it breaks down below that, that'll suggest that wave 3 is in progress down here. But we'll have to keep playing it out here. It's going to a lot depend on what's going on here. Again, I think it's better with the 1-2 here, or you know, maybe A, B, and then this is 1-2 of C maybe coming down. But nonetheless, we'd be looking for a drop lower here. I mean, even if this is 1-2 of C, we're still looking down here around this 1493, and then for 3, and then you get a 4, and then you get a 5 lower to finish that C, right? So yeah, I mean, daily we're, you know, neutral on RSI. Stochc RSI has fallen out of overbought, crossed bearishly there. So we'll see what happens. If we break out above the swing high here, this may suggest that the original count, maybe we've got the 1 down here, and 2 is in progress, and in that case, we might see price rallying up to, let's see here. Yeah, see, right up here, because this would be 4, so it'd basically be, you know, 1, 2, 3, 4, 5 here. So the 50% level around $75. Maybe $70 to $75 range would be where we'd be looking to rally back up. So then it would be A, and then it'd be B, and then it'd be C down lower. Yeah, I mean, you know, with the CPI release tomorrow, should we expect some Forex volatility? Yeah, I mean, I think anywhere you're doing it, yeah. So the euro broke parity today briefly. It got down to 0.99999. So, and then immediately caught a bid rally back up. I think that's only a third wave down, though. I think it's still got one more wave lower, which aligns with what we're looking at with DXY, which is 3, 4, 5. So it's still got to pull up, right? And I think the markets right now, the reason why they're doing what they're doing is a lot of positioning, jockeying for position there for the CPI release tomorrow, because it's been happening through this week since the weekend, beginning of the week coming into this week till now. So I think everybody's just kind of working in toward that. So, you know, at least as far as it goes here, dollar bulls are really bullish. So you know, again, I've been talking about it. You're expecting a correction in this area somewhere. So it's just a matter of working through and see what happens there. If CPI comes in beyond expectations, worse than higher than expectations, then we'll probably see the dollar rally. You know, but I think whatever happens is going to be knee-jerk reaction on the day. You know, usually happens with these news events. If we just kind of hit CPI where it's expected or lower, well, if we hit it where it's expected, I don't think a whole lot happens. If CPI comes in, I don't know. I think if it comes in a little bit lower, I think we're still, you know, it's still almost as if, you know, it hit it. But if we're coming in significantly lower, I think then the market, you know, we see some reaction the other way. But I think stocks are just kind of feeling the, you know, they're damned if they, you know, whatever the numbers are, the stocks are damned if it is and damned if it isn't. Because there's so much nonsense going on with you know, with the economy right now. So yeah, but I think as far as FX goes, yeah, I mean, you know, those are usually some of the biggest responses from government numbers, right? Because, you know, your currency kind of says, hey, here's the health of the economy right now, right? So yeah, so it'll be interesting. It'll sure be interesting to see how it plays out. I'm you know, waiting to see myself. Let's see here. If we look at this, you know, looks like 1, 2, 3, 4, 5. So it gives us 1, 2, 3, 4, 5. ABC, ABC, 1, 2, 3, 4, 5. So flat corrections gives us a 2. Then we get 1, 2, 3, 4. Maybe 5 there. So again, another leading diagonal here coming off. There is no leading diagonal here. 1, 2, 3, 4, 5. So, I mean, this could be A, flat as a B, and then C here. So what we want to see is we want to see it remain above this swing low at 19,656 and 13 cents on Coinbase. We want to see it stay above that, and then we want to see it break out above this swing high here at $20,029.87. So stay above this, break out above this, and that'll add some confidence to the idea that, you know, again, wave 3 may be in progress. Minimum expected target at 2375.50. Secondary target of... Actually, let me change this a bit. Let me make it like this. I think it's going to bring that target a little bit. Yeah. Minimum expected target here of 2314. And secondary target of 2469. For wave 3 there. And so we've got this here. And I think then, I mean, you know, if we get this secondary target up here, I think it gives us a wave 5 right around that EQ area. So yeah, because if we move up here, even we just pull back that 23.6, wave 5 up here around the R1 pivot at 25.97. If we hit the 38.2, just a bit higher there, 26.70. So yeah, I think if we do break out and head higher, I think we may see an overextension toward this higher target, which would then put wave 5 in here where we normally expect it. And then you've got 1, 2, and then 3 on the breakout through that resistance there. So I think that may be the way it's working out. Get a 3, we can get a 4. We can get a 5. And we can even get 5 to overextend up toward that 4-hour pivot up here, descending channel resistance. Again, the idea is that we get 5 waves up toward this area. That gives us 1, and we get a 2 on the pullback, and the third wave is the breakout. So looking for there. So there you go, guys. So I'm looking at now, again, if we're dropping down below wave 2 here, that kind of invalidates this count, and all of a sudden it looks like an ABC, and then takes us below the wave circle 2 here, which again puts a lot of pressure on the bullish count. I think then maybe we'll potentially see in that 15,400 area at least. So we'll see, yeah. Christopher, what's up, man? He says, long time. Last time I was on here was saying Bitcoin to 19,000, but now I'm not sure if this is a dip and rally market, so I'm not buying yet. Are you considering scenarios where Bitcoin goes sub 10? Always considering everything. But I think calling out sub 10 right now, I think is getting ahead of yourself. Yes, it's just the way I trade, right? So I don't, even if I think it's going to go to a certain, like a large time frame target, I'm still trading levels as it's going, right? And that way, you know, it limits my losses and expands my profits a lot more. The last thing you want to do is get caught looking at some severe, you know, far away numbers. Because then it's the whole psychology part of it. You kind of convince yourself that's where it has to go. You don't pay attention to what's going on. You look for confirmation bias along the way. And that just makes it really difficult to trade effectively. And so, yeah, definitely be careful of that. By the way, the other possibility here is this could be 1, 2, 3, 4, 5 maybe. So this could be a 1. And then we'd pull back as 2. Potentially right into this wick here, right around 19,700 to 19,775. So it'd be 1, 2. And then, because you're kind of hitting the EQ of this demand structure right here. So right there around that 65. And then that gives you a 3, and then a 5 up here around 20,700 almost. And so, by the time 1, 2, 3, 4, 5 gets up here, then we're getting pretty close to that resistance. So we could see that as well playing on there, just in case I get a target. But yeah, as far as the bigger targets go, sure, yeah, you always want to have an idea, worst case scenario idea, but always make sure that doesn't blind you to what may be going on. That's maybe giving you different information. That's one of the areas where a lot of new traders often get really caught up in, is they become, this whole idea of, oh my God, price has to go here, wherever here is. And then they ignore all the other information come on. They only look for information that confirms the bias. So yeah. Just be careful with that. I mean, it happens with any target, but we get that a lot. It's a lot stronger, it seems like, with these larger targets, because again, it's a larger movement. We think, man, if we short here to here, or we long from here to here, in your head, you're already spending your money, right? And when you're already spending your money in your head, you're less likely to pay attention. It's why when you go to buy a car, that's why they let you drive it around. Shoot, do you know dealers, here, at least here in the U.S., they'll often let you take it home, make you feel like you bought it before they've actually confirmed that you bought it. And then they'll call you the next day and go, hey, by the way, come in the next day to fill out the paperwork. Call you the next day, hey, by the way, we weren't able to get you the interest rate we were looking at, and you have to put more money down. Did you guys know that happens? Maybe some of y'all are car dealers and you do car salesmen, you do that. That's nasty, man. Because what it does is it sends you home with it, so you feel like it's yours. And so that means when they call you up the next day and say, hey, you need to pay more interest, so they get a larger kickback, or larger down payment, again, more money to them, then you already have bought it in your head, right? You've already spent the money and bought it. All right, you begrudgingly do it, but you do it. It's the same thing here with trading. And that's a big reason why a lot of newer traders, or those who haven't been successful over time, that's why they continue to have that trouble, because they get so stuck on price has to do this one thing that they're thinking about, that they don't pay attention when it does something different. Yeah. Well, CAD's been stronger because oil's been dropping, right? So as long as oil continues to drop, that's going to make the CAD weaker, the loonie weaker there. And then it's going to get an extra boost if the USD is getting stronger as well. So at least short term, if I'm correct in what I'm looking as far as the DXY and oil goes, at least short term, USD CAD should continue to rally a bit, because you'll have oil weakening as the DXY strengthens. So yeah. Any opinion on Bank of Canada actions versus Powell and the Fed coming out of this pandemic? Nah, not really. Again, I think overall the biggest driver for the USD CAD value is how is oil doing, because you remember Canada gets so much, like 20 or 25% of its revenue from oil sales. So that's a significant part of the value of the Canadian dollar, the loonie. And then, of course, what is the U.S. doing? And so Powell, hawkish Powell all of a sudden, right? And so that's just going to keep boosting USD for a bit longer. So yeah, that's what I'm thinking anyway. So there we go, guys. So yeah, again, potentially this is a 1, 2 here. Let's do it this way, and then that would give us possibly a target up here. Yeah, just a little bit out there, 20,497. And that'll be that one. And I got to make this make sense for our people, because this is our chart. Because, there at TWC, we always give you the live chart, so you don't have to actually draw anything yourself. It's all there for you every day. And as I update it, you can get the updates on as well. But yeah, so potentially alternate count there. 1, 2, 3, 4, 5 gives us 1, 2 maybe. Gives us a 3 up here. Give us a 5 closer to up here where that wave 4 is. Closer to the H4 pivot. And that gives us a 1. We'll get a 2 on the pullback. And then 3 will break out if it plays out like that. All right. All right, guys, I got to get out of here. I hope you guys have an amazing week. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. Got some pretty great announcements coming up here. Maybe next week, but I might hold off 2 weeks. But I think those are exciting times. And yeah, other than that, follow me on Twitter, guys, TX West Capital, or that's probably the most active place we are. And again, join us at howtotradetowin.com. We'd love to have you there, okay? If not, or even if so, I'll be back on Friday at 11 a.m. Central Standard Time, and we'll see how this week kind of works out here, okay? All right, guys, y'all trade safe. Take care.